Hello everybody. So this is going to be a very quick video. I'm making this video because I was making videos when we had the awful red days of 3 weeks ago. And, while the media doesn't really make videos about the mad green day we're having right now, I'm going to make a video about the mad green day we're having right now. And of course that gets fewer views, but that's okay because I don't have that many takeaways to tell you. But we're pretty much back. I mean, as far as the stocks that are those that are going to outperform, in my view, as far as the stocks that matter, are pretty much back to the January level. January 14, we're at 505 on the NASDAQ. We're now at 503. That's the QQQ, right? Not the NASDAQ, but you get what I mean. So we're down 1%. So we're pretty much back to where we were prior to the new administration entering office. We're pretty much back to the times of peak optimism before the new admin was introduced. And, what really upsets me about this, of course, is I go on a lot of, not business media, but I go on, the CNNs of the world, like the MSNs of the world, the MSNBCs of the world, these traditional media, and their main headline is is a very provocative headline about the president of the United States accepting a very expensive gift, but when you actually read, when you click, there's ads, you scroll down, you find out that the main thing they're reporting on is a potential gift for a potential presidential library. So potential, likely, potentially, that makes the headlines. Not the mad green. The headline today is mad green. That should be the headline everywhere. No, the headline is a potential gift is potentially accepted for a potential library which may or may not happen, right? And we know presidential libraries are, we still don't have an Obama presidential library. Like it's like you're reporting on fluff. They're reporting on fluff. This is fluffery. This is not like this is the real news. That's why I'm using more and more, and I'm not the only one doing that. I'm using more and more AI for my news. Right? Because, of course, the big news is with China. But to get that info, you have to scroll down on the news sites. I'm like, can you explain? This is Grok. Can you explain in a few bullet points what's the news? Here's the news, right? But China will reduce tariffs on U.S. goods to 10%. The U.S. reduces tariffs for 90 days from 145% to 30%. That's the news, right? They also said we're going to de-escalate the trade war, reduce recession fears, and foster negotiations. That's the news. They also said the de minimis exemption stays, which means that if you're Temu, if you're Pinjojo, you're still impacted. Very, very, very clear. No fluff, no ads, no paywall, no nothing, just the facts. And I'm sure if you were to write the most important news of the day, this would likely show you this. And so, this is important to realize. This is a thought I've been having for the past, let's say the beginning of the year. I've been having this thought. TradFi is becoming more and more like crypto, and crypto is becoming more and more stable. If you look at Solana, if you look at Ethereum, if you look at even Dogecoin, that's the irony of it. And of course, if you look at Bitcoin, my ongoing joke, right, for the past 3 months is that Bitcoin has behaved almost like a stable coin during this crash. Like crypto is becoming more stable. What is going on? And TradFi is behaving like the worst cryptos. Remember Apple. Remember how much Apple dropped. And there are a few things we know about this administration. And I think there's things we already knew. That's why, you remember the crash. I was telling you, I'm not worried. It's a negotiation tactic. And then if it's going to go something, it's not going to last a long time. And of course, it didn't last a long time. Because what do we know about this negotiation, right? They're transactional. They're mostly transactional. It's mostly about getting the wins, putting the tweets out, oh, I win, and you gotta have a piece of news that makes you look like you're winning every day. They don't care about losing face. In fact, we know that it was the US who called China to make a deal, because China never called to make a deal, right? It was the US who called. They don't care about losing face. So we know this, and we knew this from the prior administration, right? We also know that they need to be judged only by actions, not words, not talk, only by actions. And the last thing we know, which is the stock market, is the barometer of success. Remember Friday, buy stocks in all caps by the President of the United States. So these are really the three things that hasn't changed. And one last thing we know is that the looks, the rhetoric, right? It's like, this is not something you should take action on. The looks of the rhetoric is not something you should take action on. That's just my view, right? That's just my view. What we knew from 2016 to 2020 is about the same. Judge them by actions. The stock meter is the main measure of success, and the Bitcoin price, right? He's added the Bitcoin price now to the barometer of success, judged by the actions. And it's all about transactions. They're very transactional. Administration is all about, let's make a deal. It's like there's no hard feelings, right? It's all about business in the mind of administration. So once you have these tools to understand, I hope we navigate better over the next 4 years, to be honest, right? And I am saddened to my core when I know that many folks, some of my viewers in the comment section, I know that many of you sold at the bottom because it's so scary when every single news, of course we all hang out. Actually, the majority of all of the people we know probably don't follow stocks on a daily basis. When it was crashing, everybody that I know who never touches the stock market knew that it was, so bad. The stock is so bad. The stock market is so bad. What is going on? It's the end of the world. They all knew it, right? Are you getting calls right now from your friends who know nothing about the stock market? And in these calls, are they telling you, I hear we're back since pre-inauguration? I hear we're back. I hear the stock market is fully back. Are you getting these calls? No, you're not getting these calls. Nobody's getting these calls. So it's so annoying. Get your news from AI. That's one point. My key rules. These are just my rules. There's different style of investing. There's different styles of people. Keep in mind that if you watch CNBC a lot, the style that is featured on CNBC is a trader style. Very often a day trader style. CNBC is all about the trading mentality and the day trading mentality. And the best example of that I keep repeating is an analyst was coming before Halloween saying you should buy Tootsie Rolls because Tootsie Rolls going to sell a lot of candy tomorrow for Halloween. Like, that's how short-term CNBC is. If you're a long-term investor, I don't think there's any long-term investment news channel that you can follow. But if you're a long-term investor, these are my rules. Don't get wiped out. That's rule number one. Don't use too much leverage. Don't use any leverage if you can. My view is 10% if you're available buying power with margin. That's fine. That's my view, but that's no financial advice. That's just 10%, that's fine. Make sure you have that powder in your margin in case one of your stocks were to drop. And of course, when we have a systemic crash, correlation goes to 1 in a systemic crash. And so in that case, your margin needs to be there intact and untouched so that you don't get wiped out. In that specific case, right? So that you don't get wiped out. Another point, my key rules, is make big decisions slowly. Like a small decision you can make quick, but a big decision you should make it slow, right? Unless you're very, very truly experienced, And in my case, I usually make big decisions very slowly, and that's why I ease into stocks, buy a little bit, sell a little bit. You will rarely see me say, I say everything all at once. Like you'll rarely see me sell the whole position all at once. Like because I like to make big decisions slowly, right? Last week it was all about selling Google. You should sell Google. It's the end of the world for Google. Look at Google stock right now. Google stock is back to the level where it was roughly, right? So it's like, I guess, not the end of the world for Google. So if you had sold all of your Google last week, you would be very sad, right? But if you say, okay, I want to leave Google. I don't want Google as a position in my portfolio because I think AI is going to kill search. Well, maybe if you have a position in Google, maybe exiting it over, say, a month, a little bit every day, is likely a better way to do it because you get the average price and you shield yourself against selling it on the wrong day. My overkey rule: manage your itch to trade. You can do tiny trade, you can do options, or you can just be very good at it. If you're very disciplined, if you're a student of stoicism and you're like the most disciplined person out there, you can manage the portfolio and just look at it and do nothing at all and just stay still. Good for you. Most people can't, right? And so managing the itch to trade is very important. And so I do that with, again, tiny moves, tiny tweaks, tiny moves. You never make the big moves, just the small moves, because big moves is when you can make. If you make a big move and it's a wrong decision, like say getting out of a market at the bottom, that's a big move. That's a wrong decision. There's no recovering from a big mistake. There's tons of opportunities to recover from a small mistake. And then another point: when you see a price you like, take advantage. That's my big thing. If I like the price right now, I'm gonna buy it right now, because trying to get into the trader mentality, and this of course happened to him. On this channel. Big stock on the channel is HIMS. People were like, oh, well, HIMS is going to drop to the low 20s because there's going to be tariffs on healthcare, blah, blah, blah. So HIMS is going to go up to the low 20s. So I'm waiting until this happens. I'm waiting until HIMS got lower. And people were saying that when HIMS was trading at $28. I'm like, I like it at $28. Why would I want to wait for 22? I like it at 28. I think it's an amazing deal at 28. So anyways, if you like a price you see right now, just why wait with the hope of it going lower? It's the same as hoping it goes higher. And this is why investing with a 5, preferably 10 plus year horizon, is the best way to do it, because over a 5 to 10 year period, whether you're buying say HIMS at 28 or whether you're buying HIMS at 22, that makes no difference over a 10-year period. That's why Saylor says if you buy a Bitcoin between 0.2 and 0.1 million Bitcoin, and by the way, we're nowhere near $0.2 million for a Bitcoin. We're at $0.1 million for a Bitcoin right now. It makes no difference when Bitcoin is going to be worth 11 million a coin in Saylor's book, right? In Saylor's model, the 2030 model. So I hope that makes sense. And you could say the same for Tesla. How many people are still waiting for Tesla to hit $69? Like, I remember a crash. Do you remember a big Tesla crash when we Tesla crashed to something like 130s or something like that? Everybody was like, oh, it's gonna go to 69. That number chosen because of meme culture. It's like, really? Like no, like I like it at 130. Give me some Tesla at 130. I love it. Right? So anyways, that's the point. If you like the price you see, just get it right now. That's my point. That's no financial advice. And of course, no investment advice. This is just entertainment always on this channel. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching and have a wonderful, wonderful day.